All right, just a bit after 10 o'clock here in New York City. We're 30 minutes into the trading day. Stocks are trading down. We halted for 15 minutes after the open when we fell about 7%. And part of what we're watching here is the movements in oil. We're watching Treasury yields. But let's talk about what started all of this sell-off, and that was oil. You can see right here that WTI is down. We're trading at $33.22 a barrel. It was actually lower. Brent was trading at about $36 a barrel. We were off 21%. The Saudi Arabians have launched a price war, essentially trying to put the Russians out of business. OPEC could not come up to an agreement, and that led to a lot of fear as we went into this trading session.
Yeah, and that fear is being expressed really across different asset classes. You heard Adam just talking about what's going on in the bond market as well. There, we are seeing a 27 basis point move in the 10-year Treasury, below 0.5%, 0.43%. In fact, if you look at across the Treasury curve, below 1% yields is what we are seeing across the board. So this is expressing acute concern on the part of market participants here.
And Julie brings up the 10-year, but look at the yield on what happened with the 30 yield. It was below 1% at one point. We had the Federal Reserve, still is below 1%. We had the Federal Reserve put out a note early this morning from the FOMC that their overnight repo, they're going to enlarge that process because they're worried about the money markets and liquidity. It's going to go from 100 billion to possibly 150 billion. Also, the 2-week repo is going from 20 billion to 45 billion. So they're trying to keep money markets flush so that banks and people don't get upset about potential credit freezes down the road.
And then, of course, all of this translating back into this steep sell-off that we're seeing in stock now. As Adam mentioned, we fell 7% at the open here for the S&P 500. You see this big leg downward. Right now, we're down almost 6%. That 7% drop triggers the circuit breaker at the NYSE, which effectively means you have that 15-minute halt. We wouldn't get another halt unless we saw the S&P fall by 13% today. At this point, it doesn't look like we're on track to have that magnitude of a drop, but of course, anything can happen in these markets where we are seeing unprecedented swings. And
usually when you're looking for some kind of protection, you might go to treasuries, you might go to bonds. But one thing that we had a guest on last week on the Move was telling us they were looking at small cap stocks, but everybody's getting hit. This is Russell 2000. Again, it's the broad index. We're not talking about specific small caps, but even it is down today. Finding security here within our borders, not necessarily the play today.
Yeah, and I finally just quickly want to look at the sectors in the S&P 500 because here is where you really see the pain. Everything is red. We should start there. But it's energy stocks that are feeling the most pain today. Taking a look here at the XLE, this is the ETF that tracks energy stocks. So as we see oil itself pull back in the neighborhood of 19-20%, these stocks are down 17% collectively. Even if they're going to survive this kind of a downturn, some of the companies whose balance sheets are weaker are really going to have quite a lot of trouble here. We're also seeing financials down very sharply today. Let's get more details on what's going on. Ines Ferre is down on the floor of the New York Stock Exchange. I can't imagine sentiment down there is too great after we had that halt, Ines.
No, that's right, Julie. Although some of the traders here had expected that to happen in pre-market, they were talking about that threshold. They were watching that 7% decline at the open. That's minutes after the open. That's when the circuit breaker kicked in for 15 minutes and trading was halted. And if we just look right now at where the averages are, they are off the lows, but still selling across the board. You've got the S&P that's down 177 points. You have the Dow. Earlier, the Dow was down more than 2,000 points. Right now, it's down about 1,600 points, and all of the sectors being in the red, with energy leading to the downside, as well as financials and also industrials. Some of the Dow components which are down include Dow Inc. Those are leading to the downside. Chevron, ExxonMobil, as oil has plunged. And just talking to the traders here, one of them telling me that the government needs to sell more treasuries because you saw the 10-year treasury. It was earlier. Right now, it's around 0.5%, just sitting just below 0.5%. But another trader telling me, prices, oil prices down 30%. That is not good for the markets, and just some of this sell-off that you're seeing is very broad-based, but energy definitely getting hit.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.